Do you know the US just passed a law that could reshape the entire crypto market? It's called the Genius Act. And for the first time ever, stablecoins have clear federal rules. Whether you hold USDC, Tether, PayPal USD, or you're just curious about how money is changing, stay tuned, because this law might affect every single digital dollar you use. Before we get into the law, let's rewind. Stablecoins are digital tokens designed to keep a stable value, usually pegged one to the US dollar. They make sending money online fast, cheap, and global. They're a key bridge between crypto and traditional finance, powering everything from DeFi apps to instant remittances. But there's a catch. For years, stablecoins lived in a legal gray zone. Some were well-backed, others weren't. We've seen depegs and collapses that cost people billions. Lawmakers worried about financial stability if a giant coin failed, transparency on reserves, money laundering risks, and protecting everyday users. After a long debate, Congress finally decided it's time for a framework. Enter the Genius Act, guiding and establishing national innovation for U.S. stablecoins. Signed into law by President Trump on July 18, 2025, it's the first federal law dedicated to payment stablecoins. Here's what it does in plain English. Defines what counts as a payment stablecoin. Says only approved permitted issuers can mint them. Requires full, high-quality reserves like cash or treasury bills. Demands monthly public reports on those reserves. Gives holders priority if an issuer goes bankrupt. And it bans marketing tricks like calling a coin government guaranteed unless it truly is. So what does this mean for you in the market? Safer coins. Backing must be 100% real and transparent. Clear rules. No more guessing which regulator might sue next week. Global impact. Even foreign stablecoin issuers must meet US standards if they want American customers. Winners and losers. Big, well-funded firms like Circle or PayPal may thrive, while small issuers face higher compliance hurdles. Why did Washington act in 2025? Stablecoins grew so large they started to look like shadow banks. Lawmakers wanted to keep the dollar dominant in the digital era. They saw Europe's MyCA rules and Asia's moves and didn't want to fall behind. And let's be honest, a few scandals pushed the urgency button. Not everyone's cheering. Some argue the act could favor big banks, making it harder for startups to innovate. Others worry about too much government control over what was meant to be decentralized. And since coins can't pay yield just for holding them, some fear it may stifle creative business models. Whether those concerns play out depends on how regulators implement the law. Over the next year, expect registration deadlines for issuers, new audits and monthly reserve disclosures, possible new entrants, like fintechs or even banks launching their own stablecoins, and maybe a boost in confidence for using digital dollars in everyday life. The Genius Act could be the moment stablecoins go from Wild West to mainstream finance. Do you think regulation will make them safer or kill innovation? Drop your thoughts in the comments, subscribe for more deep dives on tech and finance, and don't forget to hit the bell so you don't miss what's next in the world of money.